2, 1.
Woo! We're the Atkinsons.
Hello, everyone.
Hi, everyone. Welcome again to our channel. We're so happy you're back. If you're new here, this is my lovely husband, and I'm his amazing wife.
Yes, she is.
And we are here to bring you a really cool episode.
So today, I hope that you all, if you haven't watched the last video, our part 1 of our homeowner series.
Part 1, check it out.
Please do check it out. We have some pretty valuable information in there.
Very important information.
Today, we're going to go into a bit of a deeper dive into kind of our process, the timeline that we did to get our home.
Yes.
So again, if you haven't seen the last video, check it out. My advice for you today is that we have a lot in store for you, okay?
A lot.
So
take notes.
If you need to take out a pen and paper, if you need to rewind just to kind of get
mental notes,
just to kind of get all of the information, we're going to try and hit you with a very dense video for you all so that you can take away as much as you can.
Dense but easy to grasp. And we categorize them in one,
2,
3 phases.
So we're going to try and make it as simple and easy to digest. We made it into 3 phases, so that it can be easily shared and hopefully easy to understand.
Exactly.
So we have a lot to get into, so let's get started.
Let's start.
So, honey, take it away. So talk a little bit about the first phase and go into a little bit about what's going on, and then I'll kind of piggyback off of you.
Okay, so the first phase, we're going to talk about a lot of the things that you get into before you close on your home, before you get your mortgage. So the first thing that we're going to talk about, we touched a lot about it in our last video, so again, check that out, is finances.
Mm-hmm.
So this is phase number 1, finances. Biggest first point that we're going to make, your max of the mortgage that you want to pay. So what is the max mortgage that you want to pay? So we talked about it last week, but 30% of the income you make should go towards your housing.
Mm-hmm.
So that includes everything in your house, like all your bills and everything. So your mortgage, what's that number that you want to hit? So for the both of us, we sat down and calculated all of our funds. We actually used a mortgage calculator, which you can actually find on like Google, Zillow, your bank accounts, your bank, where you bank. They have that where you can put everything in it and it calculates what they believe you should be spending on your mortgage. So for us, let's say we threw out a number. We said we don't want to pay more than $1,800 on our mortgage. That's what we told ourselves, and that was the cap that we weren't gonna pass. Mm-hmm. Another thing is your credit score. So credit score is super important because it is what determines how high your interest rates are gonna be, how high your mortgages are gonna be. And your credit score, it dips. So like for us, we check our credit score often, but when we knew that we wanted to close on a home, we started making sure that our credit score and our points were going up and up and up. So if you're at a point where you're like, my credit score just dropped a bunch of points, it's not looking good, maybe you want to just pause a little bit and wait until you can get it up a little bit higher, because your credit score does actually play a really, really big part in that. Another thing is the little costs that come with closing on a home. So I know everyone talks about your down payment. Oh, is it going to be 20%, 3%, 5%? I'm only putting 5 down. Like, there's a lot that goes in with a down payment. And historically, usually people will tell you, oh, it's 20%. Your down payment is going to be 20% of the home. So if you're trying to get a $400,000 home, it's going to be 20% of that, whatever that number is, okay? But it actually depends on the type of loan that you're going to get, and we will be going into that. So these are the things I just want you all to keep in your head. So your down payment is going to be a cost that you're giving up front, and then the closing costs. I feel like the closing costs aren't often talked about, but that's another lump sum of money that you have to be able to give, and the closing cost is actually 2 to 3% of the entire portion of the loan that you're going to be paying.
Correct. So
down payment, closing costs, super really big. And when we talk about finances, we also want to incorporate assistance programs. So there are lots of assistance programs. So if you're a healthcare worker, whatever it may be, they do give different assistance programs for healthcare workers. If you are a first-time home buyer, that's another big one. You can get some assistance in even government-funded assistance programs or grants and stuff like that. So look into all of those options. All of those goes into your finances, and you want to be able to take the best foot forward with your finances. If you can save a dime and a nickel and a penny, save a dime and a nickel and a penny, save a dime and a nickel and a penny, dime and a nickel and a penny. Okay, so that's for finances. So look into your assistance programs and all of that. So those are the big things with finances. You want to talk about this next one?
Yeah, so one thing that I think I wanted to mention here in this part was I actually thought that for a while that you needed to have at least 2 years of employment to get a house, to even start the process. But actually, it wasn't until we got into in contact with a realtor, which is what we're getting into now, that we found out that that's not true.
Myth.
So that is a myth. So you don't need to have at least 2 years of employment or proof of employment to start looking at a home. It does depend on your credit score. That is a really big part of it.
And where you work and the type of job that you actually have.
That's true. And so you have to look at all of these things, but you do not have to have 2 years of employment before looking at a house. So
great point, honey.
You have to get in contact with a realtor. Now, we suggest that you find a realtor that you make a good relationship with, or at least somebody, like, for example, we use somebody that is like a family friend.
Yeah, like an old family friend that my mom has known for years or whatever, and we knew that we would have we had to develop that connection.
Right.
So we developed a great rapport with her. That way we know that she was going to be honest with us. We felt like we could trust her. We had a very open communication line. She was readily available for us for any of our questions. And you need that in the home buying process. Like your realtor is like your wingman. They're the people that have to go up to the seller and say, hey, like, what are we doing? Like, I have this offer. Like, your realtor needs to be the one who takes that step forward for you and advocates for you. And not everybody gets a realtor, but we really think that having a realtor helped a lot, because my husband says this all the time, but it's kind of hard you're the one to vouch for yourself. Like, you're getting a home. It's a lot of money. So to be able to go up and like have to fight for whatever you want it can be tough because you don't know the jargon. Like, we're not realtors, we're not in the home industry, so it's hard to know the jargon. But having someone who knows those things and can fight for you was really encouraging for us. And they know it, like, they do this, so they can tell us when, oh, this seller is trying to fool you, they're trying to play you. Like, they know the jargon, so that was so helpful for us.
Absolutely. With that realtor, and you find okay, say you've met a realtor, you like them, you choose them to represent you in this process. Then, once you start to build that relationship, then they're most likely going to ask, we have to look at a lender or a person to provide you the money for the home.
Yes.
There's not a lot of people who can buy a home cash, right? So what we did is our realtor actually had a connection with somebody who had worked with her before.
Exactly.
Who has worked with her clients that she really trusted, that she really liked. So that was a big step, like what you were talking about, a big step forward for us in that direction, because we knew that the person that she would be advising us, we knew that they had been vetted, if you will.
They had been vetted. They've done this together before.
Legit.
They were a great team. It wasn't going to be hard for them to communicate. And she trusted them. So we trusted our realtor, and we trusted her judgment. And she gave us this lender. But before deciding on this lender, we did do our own research. So we went to different banks. So you can go to your own bank. We went to our own bank. We sat with our bank. We said, okay, what would be the pros and cons of us working with you in order to close a home? And there are some pros. Like, you can get discounts, all of the things. It's not another institution that has to run your credit and lower your score. It's your own personal bank. But a con with that, when working with a big branch, is that you have to schedule appointments, you have to wait on the phone. But with a private lender, more small-owned business, sometimes for us, we could literally text our guy and he was texting us back. We would call him, he would answer the phone. Like, we were readily able to ask him questions. As first-time home buyers with people in our lives who haven't bought homes, like, recently, it's kind of hard to go in the process because it's like you're searching, it's like a needle in the haystack. You're just using Google. But having someone readily available to pour into us was really encouraging. And just a cool fun fact, he was actually a Christian and a believer, and it was such a great part of our process, because he literally would tell us, like, just trust the Lord. Like, this process can be a lot, but trust the Lord. So it's like, certain things like that make you decide, hey, is this the kind of person I want to work with? How does their verbiage with me and how they approach me make me feel? So, yeah.
And he did a great job of explaining things. So
that's what it's all about, making sure that you're well educated on what you're about to do, because this is a really, really, really big decision. So you want to make sure that you have all the education. So with this, watching videos like this, doing your own education, asking the appropriate questions is super important.
So now that you have a realtor, now that you've hopefully done the research and chosen a lender, right? You've done and went and gone to banks, we've looked around to different private organizations, right? And now at this point, we talk about the different kind of loans, right? What opportunities do you have with this lender who you are stating that you really want to go with?
Exactly.
So there are three kind of loans that generally are the most, they're the they're the most common ones. We have a conventional loan, we have an FHA loan, and we have VA loans and government loans. You can take a look at that yourself. We can go on a video just about that alone.
Yeah.
If that is something that you want to see, let us know. We can do a quick video about these different kind of loans and why we chose the loan that we chose. But yeah, those are generally the loans that we looked at. And we finally, when we made our decision, we went with a conventional loan, and then we started doing the fun part. So what's the fun part?
The fun part is going shopping. We're going shopping. So you finally get to choose your dream home. So if you're like us, you had already been looking on Zillow, Realtor, all the different apps and applications, new places in the area you want to live. You've already been looking into homes. But now this is where things crack down to business. So you go shopping. So this is the biggest thing that we want to encourage for you all is go and see the house. I know online you see a bunch of pictures, but when you go in, it's a completely different experience. Take pictures, take videos. There's no restrictions on that. So we have videos because you're going to see countless different houses, and sometimes it's hard for you to remember, hey, what was it that I liked about this house? Was it in this house or that house? So take videos, document, so that you know exactly which home you actually want to go for. Another thing that we did was we created a pros and cons list. So in a specific community, we saw two different houses that we really liked. So we made a pros list for the house and a cons list, a pros list in the house and a cons list, and then we went over that, and that helped us in our decision making. So we were able to do that, which was very, very awesome. And also, remember to look back at your non-negotiables. So what are the things before you got into the nitty-gritty that you said that you wouldn't negotiate? Like, what are things that you said that you had to have? If you said that you had to have this, stick to those things. Be firm on your decisions, unless you really just switch. But look back at your non-negotiables. It was something that really, really helped us. And then this is where your lender comes back in again. So our lender actually gave us a cost analysis of each of the homes we were interested in. This like thinking about it, like really is a big deal, because he literally sent us, if we said we like that home and that home, he would send us a breakdown of all of the costs we would potentially be spending depending on their price. That was so beneficial because it allowed us to say, ooh, this mortgage will be $1,850. This mortgage will be,
one time we actually looked at a house. I don't know if you remember this. We didn't talk about this pre-video, but one of the places that we were looking at, if you remember, we loved it. It was really nice. And then remember when he was like, oh, well, the loan that we were looking at actually wouldn't work for this because it's a condo. Remember that? He was like, because they have like some kind of license, because it's listed as this, which obviously you can't tell online or just like what you were mentioning, like just going and looking at pictures. He actually told us, hey, the house is great, but in fact, this is not a good house for you because of X, Y, and Z, actually from a financial perspective. And I remember we loved that house.
We loved it.
We loved it. It was really, really nice. I think it was just brand new. And he told us that fact. So yes, he provided us a cost analysis of every single place that we looked at.
So
we just sent him. I don't know if that's the experience of most people.
I don't know if all lenders do that. Personally,
I don't know.
I've never heard of that before. But again, we appreciate it so much. But think about it. That's a lot of work for him. Like, that's a lot of work to have to plug in consistently different things, like everything goes into.
You have to call HOAs.
All of these things. Yeah. But literally, kind of like Bjorn said, like, you really develop such a strong trust with these people that you work with because they know things that you don't. Like, online it's telling us it's a townhome, but really it's registered as a condominium. And condominiums are in their own class of housing, a whole different set of rules. So really good point. Maybe that's a good thing. So the shopping part is super, super fun, but a lot goes into it, right? So then next, you choose the home, you're set on it, this is what you want. Don't get attached.
Do not get attached.
Do not get attached. Because that thing can slip like butter. It can slip and not be yours.
So when we had story time relative to our home, we actually were looking at the house, and then we were going back and forth between what the price that we wanted. Come to find out, we called our realtor contacted us.
Yes.
And she said, hey, I just wanted to let you all know, remember that location that you really, really liked? Well, it's under contract with someone else.
They went ahead with someone else already.
We were devastated is, I think, is a bit of a harsh word.
We were so sad.
We were sad, right? Because we loved the location, right? It checked all of the boxes. So we really wanted to get it. When we found out that it was under contract with someone else, we really felt like we dropped the ball.
We should have moved faster. We should have been more decisive.
And all of these things came rushing through. But eventually we ended up getting the home. But
so when something's for you, it's for you. No one can take it away.
So with all that being said, it's true. With all of that being said, yes, don't get too attached to homes. Yeah. Remember that until you sign that paperwork,
it's not yours, girl.
It is not yours. Remember, I believe that you are able to the deal can fall through when it's under contract. So it's very difficult for you, or do not get attached to homes that you do not
until it's
own
yours.
yet.
And then on that same point, the timeliness of how you move forward, like during this time, this is a critical time. I'm not someone who's like always on my phone all the time, but during this time I have my phone on me constantly, because if your lender's calling you, if your realtor's calling you, like these sellers move fast, and it really depends, like if it's a seller's market, if it's a buyer's market, like these things are really, really important. So just make sure that you're being very timely, you're reading your emails. It's a lot of reading, but super worth it, because you don't want to lose the house that you really, really wanted just because of negligence.
Right. You want to make sure that you're taking into account, just like what Sika said, all of the pros and cons, all of those things that you really wanted, but you want to move in a kind of a swift motion, right? Your realtor will also tell you and let you know, hey, this buyer is really wanting to sell. This buyer is trying to get out of it. Yeah, I'm sorry, the seller.
The seller's really trying to get this so they're like eager.
So they just want it off of their hands. So if you want to buy this place, you need to put in an offer sooner than later.
Exactly. So. And with that, the seller actually usually has an agent. So the seller's agent speaks with your agent. So that's how they're able to get that inside scoop of what's really going on with the home that you want. Right? So you chose your home.
You chose your home.
Chose your potential
you figured
home.
out what you like. Yeah.
It is time now to make an offer.
Deal or no deal. Deal or no deal. But yes, you make an offer.
So now you make your offer.
A formal offer. Right.
You make your formal offer. And that's like just basically how you say, hey, we're really interested in getting
It's just like how you
home.
Imagine it.
Yeah, it's just you make an offer. We want to get home.
So you contact your realtor, you let the realtor know, listen, this is what we would like to offer on this home. It can be under the asking price. It can be at the asking price. It depends on how you and your realtor, that conversation that you have.
And how you want to negotiate.
How you want to negotiate. It depends on what you feel the house is worth. We'll get into a little bit of that in a little bit. But yeah, you make an offer. You contact your realtor. The realtor contacts the seller's realtor, and the seller's agent. The seller's agent, and the seller's agent and the seller then have to have a conversation as to whether or not they want to move forward with that offer, or they want to counter offer that idea.
So it's either yay or nay, accept, reject, yes, no. So exactly. Okay, so they either reject, accept, or they give you a counter offer. So those are the main things. Yep. Once your offer is accepted, woohoo! You get that mortgage and close. Yep. And so there are steps that go into it. And this is phase 3. So phase 1 was that beginning that we talked about. Phase 2 was the actual going shopping. And then now this is phase 3. So you've made it this far in the video. There's a lot still coming. It's really good to stay tuned. So get that mortgage and close. So with that, there's a lot of paperwork that comes to this part. So they just need to make sure that whatever loan that they're going to be giving you, that you can back it up, what you've been saying. Yeah. So some of the paperwork you might need is your W-2. You might need some pay stubs, proof of all of your assets, your bank statement, your tax. It's getting really vulnerable, down and dirty. They want to see all you've been spending.
A lot of emails.
Your bank statement. So everything you spend your money on, they are now going to be seeing all of those things. Yep. Your credit card statements, the debts you have. So if you have a car that you are paying to own, if you have student loans, they get all of that information, and they even get your ID and your social security card, because they need to make sure that they know who that they are dealing with. And then once all of that occurs, it goes into underwriting process. What's the underwriting process?
So the underwriting process, to make it very short and simple, is that when they take in all of that information, they look at all of what or who you are, how you manage your finances, your credit score, like you mentioned, your assets, your debt, and they basically are going under the process of providing you how much they are willing to give you for your home.
Exactly. So they're basically asking themselves a question. What are the risks if we give these people the money? What are the risks? What risk is it going to cause us? And then in that process, in the underwriting process, it can be quick or it can take a really long time. And in your head, you're like, okay, well, it's taking so long. I've given you all my information. But they really have to get to the fine nitty gritty of everything. And even for us, like, they needed proof from our places of employment that we actually worked there, because like we kind of mentioned earlier in the video, we didn't have 2 years of work experience at our current job once we got out of college. So in order to speed it up, they needed proof that, you know, we're actually working here, this is actually how much that we're making monthly, kind of thing. And kind of like if we had a contract at our job, like when I got my job, I had to be there for 2 years. So it's like just to kind of show stability at where you work. And they'll call you and they say, hey, actually, can you send me this, da da da. So just make sure, again, in the underwriting process that your phone and forms of communication are very open and ready, okay? And then after all of that goes on, you also, during this process, you have to get a homeowner's insurance. So that sounds really weird because it's not even your home, but you already need to insure the home that you want to be your home, because when you close, that's when that homeowner's insurance will be included. And the reason why you need that is because they're actually going to put it on like your closing statements. It's included in all the costs and all the pricing.
Bulked into what you pay monthly.
Exactly. And usually your lender will kind of refer you to, oh, this is the person that we know who does homeowners insurance and they're really reliable. They cover all of this. But again, stuff that you can talk about with your potential lender and just do more research on. Okay? So then you go through all the underwriting. What's the big thing that you want to hear?
You've been approved.
You have been approved. And we didn't mention this at the beginning of the video, but you can also get pre-approved for what you can potentially qualify on a home. So in the pre-approval process, some companies have to run your credit, some don't. They just go based on what you tell them. But the pre-approval kind of tells you, hey, based on what you make, you can be approved for $600,000 in a loan. So that's how you know the price range that you can start looking for your house. That's really important. We just didn't talk about it. But the pre-approval process is important.
A pre-approval process is kind of like the metric that you will go off of.
That's how you know your range.
But it's much less in depth, right? What we're talking about right now is when you are about to buy the home.
Yeah, you've
like really about to buy the home.
Like your lender already told you, hey, you were pre-approved by this person for $300,000, but really you can seriously afford $220,000. So yeah, that's the base of what you can do. Okay, so you've been approved for your loan.
Yep.
Now you need to start doing all the other things. So now you have to get the home inspection. What's the home inspection?
So there are companies basically that are around where they come into your house and make sure that it is according to code, right? And cities have codes. So they make sure that the fire alarms work. They make sure that it is all the windows work. They make sure the roof is intact. They make sure that the attic and the insulation in the attic, your AC is going well. They make sure that there's no fire hazards. They check the electricity in the home to make sure that the house or the electricity is not going to be any sparks that may happen and cause a fire. It is a pretty in-depth process. How do you find an inspector?
Good question.
You are able to look for one on your own, but your realtor usually
connects you with
somebody. For example, for us, we didn't even have to call the inspector. Our realtor handled that for us. We were just here at the home when they came.
Which is really, and a lot of people don't go, but I suggest going. We suggest you go and ask questions. Like before the inspection happened, we looked up, okay, all the things that are important. We were asking questions. We want to know what they know. We want to know all the things that are not right in our future potential home.
Exactly. You want to make sure that you also get like a report after they leave to make sure that everything that they saw, you have it written down in writing.
And they take pictures of everything.
They take pictures of everything. They even include it in the document that they write. So keep that for you, for your records, even when you buy the home, past when you buy the home, so that is always in your records for future reference. But inspectors, we have, and the appraisal process as well. That is somebody that can also be connected through your realtor
or your lender.
But you can also look for one on your own.
Yes, and so the appraisal process is basically how they let you know how much your home is actually worth. So the lender does not want to give you more money than the home is worth. Right. So they're going to come in and compare your home to recent homes in the area and the market that have recently been sold. So that's how they figure out and appraise the value of your home. So sometimes the seller will upcharge the home. So they'll say, well, my home is worth $550,000, but they come and appraise the home and it's really worth $400,000. So that's when you're able to negotiate, because you're like, oh wait, you're upcharging me. This is not really what it's worth. So you just want to make sure that when the appraisal does happen, you're there as well, and that you understand that you have room to negotiate and lower the cost.
Just remember that the lender wants to give you as little as possible.
Exactly.
They don't want to give you more money than they have to.
It's a risk.
They acquire all the risk, and you are pretty much left with a beautiful home with 30 years to pay it off. So the appraisal process is a really important process. It's super, super important to make sure that also is documented. Keep that in mind.
Exactly. And then with that, as part of the inspection, this is where you're able to see the things that are going wrong in your home. So when we came, we noticed that there were the sink was leaking, this was broken, this was broken, this was broken. And the inspection person, as well as the appraiser, the inspection person was able to tell us, the inspector, they were able to say, hey, all of the things that are wrong, it comes out to about like $1,500. So that's when our realtor was able to go back to the seller and say, hey, can you give them $1,500? Can you remove $1,500 off? Can you give us a credit? What can we do so that we're not paying for this? Because the house should be in selling shape. When they're trying to sell the house, it should be. I mean, some people will sell their house in condition as it is, but for us, we wanted to see if we would be able to get some type of discount on the home because of what went wrong. So you can still negotiate in this process. Never give up on lowering the price. Sometimes they'll work with you, sometimes they won't. Okay, so you negotiated with the pairs, you got the discounts that you wanted. Now you're at the final walkthrough. This is like the last stage. You finally made it. This is 3 days before closing, 2 days, or on the day of closing, but it's really close to closing. You walk through the house and just make sure that it is in tip-top shape, how you decided that you wanted to buy it, and that nothing changed. So if the seller said that you can keep all the appliances, you want to come back and make sure the appliances are still there and that nobody took them out, or that there's not a random stranger who's living in the house all of a sudden. That happened to us. We came for our final walkthrough and there was a bed in the room, clothes, toothpaste, toothbrush, and we were just very confused because it wasn't there prior. Yep. So it's very important that you attend your final walkthrough and that you make sure that your house is in the condition that you want it to be. Okay? You do that, you do what you can, and oftentimes if there is an issue, they sometimes will fix it for you a little bit before. So our seller, he actually just sent cleaners to come clean up the mess that the friend or family member he had let stayed. So yes, very important, your final walkthrough. And then it's the closing disclosure. So they send that to you, a bunch of documents that just talk about closing, and all the things that you talked about. So more writing, more contracts, more signing. For us, it was digital. And then you go in person and you drive. And it's the day that you get to close on your home. We closed on our home February 14th. We were very ecstatic. Yes. And we sat down and we signed those papers. Initialed.
1,000 papers.
Like, we're not playing. It was so much initialing, but we were so happy to be doing it. And they explain to you everything that you're talking about. But remember, you're buying a home. There are legalities that go into it. And then they give you the home, and the house is yours to do with what you want. So this is it. This is the video. You made it to the end. Thank you so much for watching. If there are more topics specifically that you want us to go into regarding all of these things, because I know that it was a lot, just let us know and drop it down in the comments, and we can do more videos talking about specific things if that's what you all are looking for.
Just wanted to mention that we are not financial advisors.
By no means.
We are not home lenders. We are not realtors. We're just sharing our experience of how we bought our home, hoping that it can bless somebody with this information. So take it as you will. We are we are people who love our home. I want to share this information with others. So that's just, I guess, a disclosure that we wanted to put out there.
Yes, disclosure.
Another one is just to continue to love one another. Hope that we all have a wonderful day.
So sweet. Continue to love one another. Continue need to love one. No, seriously.
Yeah.
And use your resources. Develop relationships and enjoy the process. It was a tough process for us, but we really enjoyed it because now we are homeowners. So enjoy the process. Reach out to people. Get advice. Again, something that we always do. Ask wisdom. We're just looking for wisdom. Talking to people who own homes and what their process look like. And do your research. Educate yourself.
All right.
Awesome.
Anything else?
No. Yay!
That was a lot of information.
It was a lot of information and a decent amount of time. So, thank you for tuning in and join us next week again. Subscribe if you haven't already and like our videos. And if you've been watching consistently and messaging out to us, we do want to say it means so much. Like, it really does. Like, it really means a lot to us that you all care. Seriously. Thank you. Bye.
We love you. Bye.
Bye.